Welcome to Money Chic, Financial Education with Shari Rash, the podcast that's here to empower you with the knowledge and skills you need to master your personal finances and live your best financial life. Hi, thanks for joining me today. I am Shari Rash, the founder and financial advisor at Greenway Wealth Advisory. Today, I wanted to talk about what to ask when you're interviewing a financial advisor. It can seem pretty intimidating, one, to get to the realization of maybe I should talk to a financial advisor. Am I full on adulting right now? This is a pretty big step. Do I just work with my parents' advisor? It seemed to work out for them. What do I say, or what do I even look for when interviewing a financial advisor? The first is there's so many advisors out there. And if you'd like to learn more about this and read it, you can go to also visit my blog, greenwaywealthadvisory.com/blog. And you'll see my post there. But there's so many advisors out there. You throw a rock down Main Street, USA, you're going to hit probably a healthy handful of financial advisors. And we're all so different. They're all so different. And not to say one's better than the other, but you have to find who works best for you or what you're looking for. There are advisors that represent big companies. Think of the Morgan Stanleys or Wells Fargo. And then there's advisors that are with insurance companies. So think Prudential or Allstate, or there's Bob Smith, financial advisor. What company does he work for? Is he just by himself? Does he have a big company behind him? And advisors, they all seem so different, but may also just seem similar at the same time because you may not necessarily understand what you're seeing or what the difference is when you see all of these advisors. So it's hard to tell advisors apart at first. You have to first get an idea of how they work with the clients, how they understand their services, also just get a feel for their personality. It's a lot like dating. You could see someone's profile if you're online dating and they may seem great, and then you meet them and not so much. A financial advisor could be the same thing. So what I say to my clients or prospective clients when we are interviewing each other is your financial advisor should be alongside of you through multiple phases of your life. So obviously right now, because you're looking for an advisor for right now, but then as you lose your job, you move on to a new one, potentially get divorced, have children, have grandchildren, buy a house, move, your advisor lose parents. Your advisor should be right there with you and be one of the first handful of calls that you make when a major life change happens. So if you're sitting down talking with someone and realize, I don't like this person very much, they're probably not a good fit for you. They could have all the best services in the world, and their firm may seem like the best thing since sliced bread. But if you don't even like them, then it might not work out. But finding the right advisor to work with, don't just assume your parent's advisor or your friend's advisor is going to be the best person for you. You need to find the right advisor to work with. And a good place to start is asking for referrals, asking for recommendations. But you need to compile your own list of advisors as well. So do some Googling, and don't just Google financial advisor near me, because then you're just limiting yourself to advisors that are near you. Google financial advisor for millennial family or financial advisor for female breadwinner, something that is specific to you and your family and what you're looking for. Financial advisor for one income family, financial advisor with focus on say paying for children's education. Whatever you're looking for, you need to find that right advisor, and just limiting yourself to an advisor in your immediate area is a disservice. So once you find a handful of advisors, start interviewing them. Find the ones that are best for you. So schedule an introductory meeting. They should be offering introductory meetings. And it's an interview for both of you, for you to get a feel of how they work and for them to get a feel for you as well. Have questions prepared. Luckily, I'm going to give you some questions that you can use when interviewing financial advisors. So I'm doing a lot of the hard work for you right now, but these are questions that I think are really important to determine if an advisor is the right fit for you. And thankfully, there are no right or wrong answers, because how that advisor works is how that advisor works, but there could be some red flags. So I'm also going to share with you some red flags. So when you're talking with a financial advisor, ask them about their typical client base. Who is their typical client? Who do they serve? Who do they most enjoy working with? Many advisors have a certain clientele that they enjoy working with, or they do their best work with. So if their answer is the red flag being, well, I work with retirees, those just started out in the workforce, women, business owners, it kind of seems like they work with everyone. That could be a red flag, because their services may not be tailored to you or the demographic that you fit. So understanding who they work with, or if they say, I work with retirees, or I work with those that are 5 years away from retirement, and you're 25 years away from retirement, you may not be a good fit just because they're not serving clients in your season of life. And you want to make sure that you're working with someone that understands where you are in life right now and plan accordingly for that. So one, who are your clientele? Who do you do your best work with? And let them answer. And again, the red flag is if it pretty much sounds like they work with everyone, or the old saying goes, if you fog a mirror, I'm gonna work with you. They may not be a good fit, because then their products and services may not match what you're looking for, what's going to most benefit you in the phase of life that you're in. Are you a fiduciary? This is a big keyword that the financial services industry is really utilizing, and a mentality switch. Financial service industry is migrating from a suitability mentality to a best interest mentality. So being suitable, having a product that's suitable for you, would mean that the advisor has to justify that the product is good, it's appropriate for their client. There may be better options out there, but you know what? It's good enough. It checks most of the boxes, and it's good enough. That's a suitable product. Now, fiduciary advisors have to show that the product that they are using, or the strategy that they are implementing, is in the client's best interest. So a fiduciary financial advisor is required by law to act in their client's best interest. And you may think, well, I thought that was always the case. And no, it wasn't always the case. So to put it simply, a fiduciary sits on the same side of the table as you. Some advisors are not legally obligated to work in your best interest. They're only required to find products and services that are suitable, that are good, they get the job done for you. It's not easy to be a fiduciary financial advisor. There are licenses and legal hoops that you have to jump through as a financial advisor, a fiduciary financial advisor. And fiduciaries have chosen to make their job a lot harder. But in the end, that's a good thing because they want to do the best possible work for their clients. So if you're curious about the licenses the financial advisor you're interviewing holds, you can go to broker check. You can just Google FINRA broker check and put the advisor's name in there, and you'll be able to see the licenses that they hold and if in fact they are a fiduciary. So a red flag is potentially the advisor you're interviewing is not a fiduciary. That just means, again, they're not legally required to work in your best interest, to make decisions in your best interest. They just are required to offer you products and services that are good, that are suitable, they're good, but they may not necessarily be the best for you. So ask the financial advisor, how much does it cost to work with you and how do you get paid? As financial services has evolved, just like moving from suitability to best interest, the way advisors have been paid is changing as well. The original way advisors made money was through commissions. So they would earn a commission when they sold a product. Again, it was suitability. So you sell a product that is suitable for the client, you get a commission, and then kind of everyone goes on their merry way. When an advisor gets paid a commission, they're not necessarily required to really ever speak to you again. It's perfectly acceptable for them to not. It's much more transactional. Kind of think of it like a realtor, right? You buy a house or you sell a house, the realtor helps you throughout that process. And then when it's over, they get a commission, you get a house, and everyone kind of goes their separate ways. That is how financial advising used to be. A product would be provided to you, and that advisor would get paid a commission, and then that was kind of it. Now, many advisors that act in a fiduciary capacity and a best interest capacity, they get paid an assets under management fee, or they are a fee only. So it's very clear how they're being paid. If an advisor is managing an investment portfolio for you, they will say, I am paid 1% of the account value each year. So it's very clear. You will even see that fee leave your account each year as well. Or advisors also can operate under a fee for service capacity, meaning I do a financial plan for you. I set you up to achieve these goals. We work in an hourly capacity and it's a flat fee. So it's a fee for service. It kind of like going to your doctor. You go to your doctor, you pay your copay, they take your vitals, the doctor gives you some recommendations, and you go on your way. You may see them again in 6 months or in a year. Everything looks great. Hey, improve this. Financial advisors now can operate the same way in that the client comes to them, they get paid a fee, advice is given, analysis are ran, and then a strategy is created based off of that. So that's now the future. So before, the past was commissions and kind of fees baked in. Now, today, the industry is becoming much more transparent, and it's very clear what you are paying and what you're getting in return. So a red flag is that the advisor is not clear and concise on their fees and how much you are paying for their services. Another question to ask the financial advisor is, what is your value proposition? Why is your cost worth it? So the advisor should be able to explain to you what they can do for you, why their clients work with them, and why you choosing to work with them is going to make your life better. And try to read through the jargon. Is every advisor you're speaking to kind of repeating the same jargon? Do you like what they're saying back to you? Do they offer investment strategies that align with your beliefs? Are they providing you a customized plan and customized solution? Or does the product kind of seem canned? Does it kind of seem like they offer the same thing to everyone? Or is it really for you? How often do you meet? So what do I get out of this relationship? How often do you communicate? Do you send out email newsletters? Do you text message? If I call you, do you answer the phone? So if I have a question, can I just call you? How easy is it for us to schedule meetings? Getting an idea of what it is like to work with the advisor is very important because that's what it's going to be in the future. Also, another question as a follow-up could be, what is it like to be your client? What's the other side of it? And advisors should be able to explain what it's like to be their client and what you get for it and what your overall experience is. A red flag is that an advisor is not able to articulate what they're going to bring to your financial life, how your life is going to improve by working with them. That is a red flag. If they can't articulate it, then that means their clients haven't articulated it to them. So just be on the lookout for that. What are all of the services that you provide? So oftentimes, especially fiduciary financial advisors will provide financial planning services in addition to managing money. So if the advisor kind of seems like a one-trick pony, meaning they only manage money, you're not going to get a comprehensive experience. You're just going to get your money managed and maybe stock market jargon spoken to you. The newsletters may be very market performance oriented versus more comprehensive, adding value to your financial life, not just value to your investments. If the advisor offers financial planning and investment management, that's great. That's a plus. If they also can help you with insurance, college planning, estate planning, tax planning, budgeting assistance, retirement planning, debt management, what services do you need, or do you think you need, or you think you're going to need in the future, and make sure that advisor offers them now, so you don't have to go through this process in a couple of years when you're looking for a service that advisor just can't offer you. And also make sure it's very clear what they offer, because it would be unfortunate if you go bringing in other financial professionals into your life to provide services that your advisor that you've worked with, that you had a good relationship, could have offered to you to begin with. So a red flag for this would be it's not clear what they offer, or they only offer one service when you're looking for a more comprehensive experience with your financial advisor. Asking the advisor, what is your investment philosophy and management style? So, how do you invest your client's money? What do you believe in when it comes to investing? What's the management style? Meaning, do we see money moving around a lot? How often does the advisor look at the account? Do they meet with you quarterly or annually? What's covered during an annual review? A good advisor will regularly check on your account, monitor your account, take advantage of market opportunities, provide recommendations, inform you about what's going on in the market and how it affects you. So, and also, are they able to explain to you what's going on in the market, in the outside world, in your investments in a way that you understand? Can you bring that information home and explain it to your partner, or explain it to your friend, or explain it to your 11-year-old child? Do you understand what's being said to you? And are you able to articulate it to someone else? Because if you're able to explain it to someone else, that means you understand what they're saying, and they're speaking to you in a way that is beneficial for both of you, because it's not full of jargon and it's very clear and it's not confusing. So a red flag is that the advisor does not have a set schedule for reviews. There's no checks and balances to make sure that whoever's managing your money is doing a good job. Ask the financial advisor, where do you keep my money and how can I see it? So there's many parties to a financial account. The advisor, the investment provider, and the custodian are just a few. The custodian is who actually holds onto the money. The investment provider is who is providing the vehicle for you to invest. And the advisor is kind of the quarterback between everyone. And the custodian very well could be different from the investment provider. So there are a lot of parties when it comes to financial accounts, and that's okay as long as you understand who they all are. And a lot of times the custodian is different than the investment provider and is different than the advisor because it's all for your protection. So how do you view the accounts? Where are my statements coming from? Who is sending the statements? The investment provider and the custodian are required to send you statements. So you very well could be getting statements from two different entities. Can you send those statements electronically? Will you review my statements with me? A red flag is that the advisor's own company is the custodian, the advisor is the portfolio manager, and there's no checks and balances. To put it in perspective, Bernie Madoff was the advisor, the custodian, and the portfolio manager. There was no checks and balances. There was no third party to oversee everything that he did. So that's why when you say, how can someone get away with this? It's because there's no checks and balances. You need to have checks and balances. There needs to be compliance and overseeing everything that the advisor does, because again, it's all in your protection. It's all in your best interest. It'll take some time and a little bit of legwork to find the right advisor for you. But once you do, your financial quality of life is going to skyrocket. It's important to find someone that you like, that is going to be one of those handful of calls when a major life event happens, that speaks to you with respect and speaks to you in a way that is easy to digest, easy to understand, and that you enjoy talking to. So make sure it's like dating. As I said in the beginning, you may have to kiss a few frogs before you find your prince, and that's okay, because they're helping you build your nest egg, build wealth, manage your life savings. You want to make sure you like the person that you're that's on the other side of the computer, or other side of the phone, or sitting right across the table from you. So it's going to take some time, but keep in mind these questions. Be on the lookout for red flags. And again, if you want to read about this in more detail, you can go to my blog, greenwaywealthadvisory.com/blog, and you can see these questions and learn a little bit more about the red flags. Thanks for joining me. I look forward to seeing you soon. Ever wondered how to secure your financial future? Introducing Financial Foundations, the ultimate financial planning program. Take control of your money, plan for the future, and build a secure financial foundation. Join us on a journey to financial freedom. Visit greenwaywealthadvisory.com today to start your path to a brighter financial future.